We begin with the international oil price benchmark Brent, which has soared to almost $78 a barrel. That's after OPEC and its allies failed to strike a deal on production levels as the global economy recovers. At the heart of the matter is a dispute between two of the group's closest members, Saudi Arabia and the United Arab Emirates. Paolo Montecillo has the details.
There's a widening gulf that threatens to divide the world's oil cartel. On one side is Saudi Arabia, the leader of OPEC. On the other, a reliable ally on most issues, the United Arab Emirates. As a result of the uncertainty, Brent has soared to its highest price in 3 years.
Higher oil prices and higher fuel prices are ultimately a tax on the consumer. They reduce people's spending power. They have to pay more at the garage forecourt. They have to pay more for energy in their homes. And corporations also face higher input costs in many cases as well.
The standoff stems from Abu Dhabi's opposition to a two-pronged plan by OPEC and its allies. The deal would raise the group's output by 400 barrels a day each month from August to December. It would also keep supply below pre-pandemic levels until the end of 2022. These numbers are based on the volume of oil the group was producing in late 2018. At the time, the UAE was pumping out 3.2 million barrels a day. But the country says it's capable of producing 4 million and wants its baseline adjusted to reflect that. Saudi Arabia has rejected this demand.
I don't know of a country which decided one day that because the market was chaotic and a certain country's production went up, took 1 month as the basis of its production power.
The OPEC alliance has dictated oil prices for decades. Now, its members can't even agree on a date for when to continue talks that were aborted on Monday. Unresolved, it could lead to more volatility in oil prices, derailing the global economy's fragile recovery. Paolo Montecillo, TRT World.
For more on this, let's bring in Ellen Wald. She's an energy industry analyst and the president of Transversal Consulting in Jacksonville, Florida. Welcome back to the show. Ellen, now tell us, until OPEC Plus convenes again, what is the status of that prior deal on output cuts?
So the status is that they're going to continue producing at current rates, which is what they're producing in July. And the plan is to just continue producing at that rate in August, September, October, and beyond. So we're not talking about a situation in which any one country is threatening to skyrocket production or even cut production more, but just maintaining the status quo. The issue is that maintaining the status quo in the current market has led to an increase in prices, and that's actually been reflected in Saudi Arabia's. Their most recent official selling prices have been increased for the month of August already.
Right. So, which brings me to the next question. If there was no deal, the expectation was that prices would start to fall as all producers would ramp up production. That hasn't really happened. In fact, the opposite is true. Can we, as people who pay money at the pump and for so many other uses of oil and gas, expect prices to come down soon after?
Well, what we're seeing right now is a lot of volatility in oil prices. They rose after the news broke that OPEC hadn't reached a deal to increase production. And that's largely because the market was really expecting OPEC to agree to increase production. But we're not seeing the dissolution of the entire group or the entire agreement like we saw last March, where Saudi Arabia and Russia really couldn't get along, and there was kind of this specter of the entire thing falling apart. That's not the case here. The UAE isn't threatening to depart the whole group, although there is obviously kind of the specter of that. What they're really saying is we want to renegotiate the baseline because our production capacity is different now, and that means that we're actually cutting more as a percentage than other producers are. And so there really seems like they are committed to working within the group, and that means that we're probably not going to see any one country kind of dumping oil on the market.
what we are seeing already is the impact of these prices on so many different economies. In India, petrol prices at the pump are at record levels. South Africa is raising prices. Many other countries. In China, we're seeing auto sales falling. EV sales in the US are rising. What sort of an impact do you think these price levels would have on the global economic recovery, especially for countries that rely on energy imports?
Exactly. And that's one of the reasons, in fact, that India was really vocal about indicating that it really would like to see OPEC increase its oil production because it is a large importer of oil, particularly from OPEC countries. And we are seeing the impact at the pump. Consumers are paying more for gasoline and other products as well. That's also being compounded by the fact that inflation is rising. And so that's also creating a price increase as well. And that does threaten global economic recovery. The more you have to pay for fuel, the less you have to spend in other areas. And so it really is a delicate balance between how high is too high and at what point will we actually see the entry of other producers onto the market whose oil was really too high too high priced to be marketable before.
So tell us in a nutshell then, who do you think are the winners, who are the losers at current price levels?
Well, right now, producers are definitely winners because they can charge more for per barrel for their oil. Hopefully, in the long run, it's possible that higher prices may actually induce some more investment into the industry. Although that's not looking super likely at this point. Consumers are definitely losing out because prices are rising.
All right, I'm afraid we're going to have to leave it there, but thank you so much for joining us on the show, Ellen Wald from Transversal Consulting.